This is episode 98 of the Rohit Radio Show, and in this video, I want to discuss the 7 qualities of a good stock market investor. Number 1, the ability to not do anything. So basically, if you have a lot of cash, there is always this tendency to invest that cash. Well, you don't have to do that. Just because you have cash doesn't mean that you have to invest in the stock market. You also have to look at valuations. If you are buying a company which is a growth company, but if it is selling at a PE multiple of let's say 95, it doesn't make sense to invest in that company. So you are better off sitting on cash and waiting for a market correction and waiting till the price reaches a level where you are comfortable investing in the market. So that is why I say that the ability to not do anything when you have a lot of cash to invest is one of the most important qualities of a good stock market investor. Have patience, prices will come down, you will get the opportunity to buy. Number 2, the ability to understand a business. Kim Kiyosaki, the author of the book Rich Woman, says that only invest in things that you understand. Warren Buffett says that only invest in things that are within your circle of competence or within your circle of confidence. Do not invest in something that you do not understand. So number 2 is your ability to understand a business. If you like a particular business, go and do your due diligence, learn everything you can about the business. And the more you understand about the business, the more confidence you will have when you are investing in that company. So the number 2 quality is the ability to understand a business. Good stock market investors understand the business that they are investing in. Number 3, the ability to decode the story from the numbers. If you are finding it difficult to do qualitative analysis of a company, you can turn to quantitative analysis. Look at the past 10 years worth of financial data of the company, put it in an Excel sheet, find out what is the gross margin of the company, net margin of the company, the inventory turnover, return on equity. Do all those calculations. Those numbers will tell you a story. Good stock market investors look at numbers and they know that this is a great company. They are looking at a great business. Imagine a business which is making a return on equity of 25%, which has a lot of cash on the balance sheet, which is regularly giving out dividends, which has a positive free cash flow, growing free cash flow. It is compounding pre-tax operating earnings at more than 15% per annum. What else do you need in a business? So good stock market investors have the ability to decode the story of the business by just looking at the numbers. After you have looked at the numbers, then you can get into the qualitative analysis. And qualitative analysis is very subjective in a sense that you grow with the company. So for example, it might take you an entire year to fully understand a business, but you don't have to wait the entire year to actually start investing. You can start investing now because the numbers are the proof. You can see in the numbers what the business has been doing. Your knowledge about the company will grow over a period of time. Number 4, the ability to read an annual report in less than 2 hours. If you want to become a good stock market investor, you must learn how to read annual reports, lots of annual reports, and you have to read them very fast. If you are looking at an annual report which is 400 pages long, you should have the ability to finish reading those 400 pages in less than 2 hours, because you have to focus on the breadth of your knowledge, not the depth of your knowledge, at least in the initial part of your research. So breeze through these 400 pages in less than 2 hours, only focus on that information which is critically important. I usually read an annual report in less than 1 hour, because if I decide, let's say I want to read 4 annual reports today, I spend 4 hours that day reading. In 1 hour, I finish one annual report. I only look at data which is extremely important. So the ability to read an annual report in less than 2 hours. You have to read lots and lots and lots of annual reports. Only then will you be able to compare different kinds of businesses in different kinds of sectors. Number 5, no FOMO, no fear of missing out. People think that if they don't invest in the market, others will keep on making money and they will miss out on the ride. So fear of missing out. Good stock market investors do not have the fear of missing out. They do their own research, they do their own due diligence, and they wait for prices to correct, so that when prices are at correct valuation, only then they pull the trigger. Rakesh Jhunjhunwala used to say that you don't have to attend every party in town. So wait till the valuation of a company reaches to a level where you are comfortable investing in. You should not have the fear of missing out. Let other people do whatever they want to do in the stock market. You must not have any FOMO. That's a good sign. That's a good stock market investor. Number 6, the ability to just sit in a room and just read until you reach a level where you can form your own independent opinion. You don't have to watch business news channels. There is absolutely no need. All the data that you need is available online. All the data that you need is available in annual reports and company filings. Everything is there at your fingertips now. No, there is no need to watch any business news channel. Just read. Intuitively, you will start forming independent opinion, and that independent opinion is what will create long-term wealth for you. It will keep you away from the market noise, which is really not required. Number 7, the ability to resist the urge to sell. You have identified a good business. You have bought it at a valuation which was reasonable. Once you have bought, your job is pretty much done. You don't have to do anything. As long as the business is growing, as long as the business is getting better, as long as the business is improving, there is absolutely no need for you to sell. Forget about the valuations. Even if the valuation goes insanely high, just stick with the business, because it's very difficult to find great businesses. And if you find yourself in a position where you are a shareholder of a great business and you have bought it at a very attractive valuation, those kind of opportunities are very rare. So when you are in that position, just sit there. See, investing is a game of inactivity. It is not a game of activity. So be patient. Not doing anything is the best thing that you can do in the stock market. Thank you so much.